What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, I'm going over Luna Classic as it is finally doing something that we've been talking about for the last two videos that I do believe could have a very big impact on the price very soon. So let's not waste any more time at all, and let's get straight into today's video. Now, do remember to stick around towards the middle to end the video, as I'm going to tell you all how you can get up to $115 completely for free. So don't miss that out, especially right now in this bear market. So what is going on with Luna Classic? Well, in the last video, I was giving you guys a key breakdown of exactly what I'm looking for to the upside, in which I told you we needed to break this 33 level where this green line is. I said that after we put in such a roll of this nature in the left shoulder, seemingly came down to put in this strong push to the downside as a head, that all we needed to see was a roll off of this level to create the right shoulder, and then we're in perfect preparation and position to see some type of strong inverse head and shoulders playing out on the 4-hour charts, which has a strong tendency to see some type of growth to the upside if played out correctly. Now, what we can see is that is exactly what has been happening. You come to the hourly charts here and look how this thing is forming. Well, of course, we saw a bit of a reach towards this 33 level. We saw the pullback off of it and the creation of the descending wedge, which is typically a bullish breakout pattern. Then we got the bullish breakout, of course, as we expected, got a little bit of resistance at high number 1. And now we are running into some resistance as we enter into our bearish liquidity zone. What a bearish liquidity zone is basically whenever you have a bunch of points of resistance of this nature in one little area right under directly a key level of resistance like 33, this is your bearish liquidity zone, in which this little area is where all the bears are going to be trying to sell and continuously push the price down. But once we're capable of breaking that, usually the bulls are capable of flipping back into control, and then we really see strong growth to the upside. So what we can see is that this, again, head and shoulders on the daily charts has been playing out beautifully. Let's just keep it on the 4 hours to make it clear, but the 4-hour charts, I mean, it's beautiful, right? Again, left shoulder, we got head, we got right shoulder. We're entering into our bearish liquidity zone, which is even further identified by the wicks that we see here, right? You can see every time we got up to this zone recently, we start to wick into it, means that we can't hold within it. And that just goes to show that this is the moment in which we need to start looking for us to actually get closes in this level as we do approach this 33 point. So looking at Luna Classic, what I'm going to say is that we are in a perfect position to finally see some growth here, okay? What I'm going to say is that you need to be on the lookout for this 33 level to get broken. If we're capable of doing so, we've now done something that we've not been able to do in multiple weeks. It would get us above this key level of bearish liquidity in which all the bears have consistently been pushing the price down off of it. And then that would also start to enact our inverse head and shoulders breakup target, which is in perfect position for macro growth as well. What that's going to be is what we're going to do is, again, take this measuring tool and go from this here neckline all the way down, boom, to the top of the head. Now, what you're going to do is take that distance and apply it to your neckline, and that puts us right in the ballpark of around 48 to 49 as a breakup target. Now, the reason that this specific level is so important is if we draw a horizontal line on it, then we draw a macro Fibonacci's. You can see here that that is also going to coincide directly, I mean almost perfectly, with the top side of our 618 to 786 macro Fibonacci box, which is the box that usually is either going to bounce us back to the downside, or once we break it, we're likely to go on and set new all-time highs. So considering the fact that we have a breakup target that goes directly into a key point of resistance, that tells me that there's a strong chance this full breakout does occur once we break this 33 level, and that could be gains of anywhere, between, let's call it 34 to up to 50%. Now, it very well could do something of this nature, right, in which we see the breakout from 33, boom, and then we start to come back down, we retest, and then we get the move or something like that. It's not going to go straight up, or it's, usually not going to go straight up, but I do believe that this is the move that we could see happening once we break 33. Now, what I do want to remind you of again, guys, is that if you do use the sign up link down below, you will get $15 in USDT futures trading bonuses completely for free that you can use. You can trade it, do whatever you want with it, of course. And then if you do go ahead and follow up with a deposit of up to $1,000, you will get 10% back on that deposit. So if you deposit $100, you get $10 back, $500, $50 back, $1,000, $100 back. Guys, this is the best sign up and deposit bonus on the internet right now. now in my opinion. Go ahead and take advantage of $115 completely for free. And then there are more bonuses up to $4,000 with even more deposits and things like that. But definitely go take advantage of this, especially while we're in a bear market. Make the best use of any capital that you possibly can. And I do believe BitGit here is one of the best exchanges in the world. So definitely go check them out. But with that said, guys, I mean, I do believe the writing is in the stars at this point that we need to be looking for this breakout of 33. Now, nothing's guaranteed, right? We could break 33 and immediately just crash to the downside. I'm not saying that's not a possibility, but it seems more likely that if we break 33, strong chance is we see a 20 to 30 at least percent push back up towards these levels. So, you know, maybe retesting the 40 to 45-ish area. But again, until that happens, I'm not doing anything crazy. I'm not buying. I'm not going long. I'm not doing anything of that nature until we break 33. Now, right now, the only thing that would invalidate all of this, in my opinion, that would say, okay, never mind, is if we start to come back down and make lower lows off this level and lose, I would say 24. You know, if we come back down below where this prior shoulder goes down to, right around here, likelihood is we're in a position to really just continue to the downside. So maybe there is the ability to short it once we lose 24, but I would have to be reading the charts when that move starts to happen in order to gauge if it makes sense or not. But right now, while we're above 26, I do believe the breakout of 33 is most likely to happen, and I am on the lookout for when it happens to start my next long position up to this 40 to 45 area. So with that said, that's going to be about it for today's update. Of course, I hope you guys do enjoy these short, quick, and simple updates in which we talk about what to expect and how I'm going about it. If you do, of course, you can always let me know simply by smashing that like button and subscribing to the channel if you are new. And I will see you all next time. Peace.